Okay, so let's make an update on the situation that we currently have on USD CAD. Let's start from the monthly time frame. Now, on the monthly, what we can clearly see is that the market has created this very nice impulse to the upside. After an impulse, what do you expect? You expect a retracement. And if you want to measure this retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the low to the high of the impulse. And by doing it, you can see that the market retraced exactly to the 0.786 of the Fibonacci taken on the impulse, which is precisely the previous resistance, now turned support at this area. So the market retraced exactly to the level at which we expected the market to retrace in the first place, because this is the last time that the market went to the downside before going to the upside. So is precisely the previous resistance, now turned support, lining up perfectly with the 0.786. And from here, you actually expect the market to give you a shift away from the area, since we have quite strong confluence of support at the zone. Going down on the weekly time frame, what we can see. Now, on the weekly situation is as well very interesting. In fact, we have a market that, first of all, is clearly showing us that this area is very strong. In fact, we have the previous weekly resistance here, again resistance here, again resistance here, and again resistance here, which after the market broke to the upside is turned support here, and the market respected it, and again support here, and the market respected it again with this weekly candle. So on the weekly, clearly the market is showing an interest at this level, and it is respecting it. Plus, we can also see that the way in which the market approached this zone provides a good opportunity, because we have in M formation, so a bullish pattern. After an M formation, you expect the market to make a move to the neckline. So we have a bullish pattern testing a very strong level of support, both from a monthly and weekly time frame. Going down on the daily, what do we see? Now, on the daily time frame, we can see a very interesting thing. The market made this move to the downside, went to hunt all stop losses that were below this area, and then broke above that zone, which is a very interesting thing and a very kind of very predictable thing, considering that from a 4-hour perspective, nothing was bullish. The market never provided an opportunity. It just continued to the downside. And in fact, we never entered any long with students, because simply everything has been bearish all the time, pretty much, both from a daily and also 4-hour perspective. Actually, on the daily, the only moment in which everything was bullish was here when the market had this support. However, on the 4-hour, everything remained bearish, so impossible to take any trade. Now that the manipulation has been made, the market is breaking back above the structure, which provides a good opportunity. So how we will be approaching this kind of situation with students. Now, before I show you that, let's go and give a quick check at what we have from a COT perspective on USD CAD. So what the biggest banks and institutions are currently doing. So how are they positioned? Now, what we can see is that if we check the CAD, what we're actually checking is CAD USD, because all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you are already checking CAD USD. And if you want information on USD CAD, you simply have to reverse everything. So on CAD USD, what we can see is that we went from minus 35K net positions all the way down to minus 12K net positions. So clearly institutions were buying the CAD, meaning that if they were buying CAD USD, they were selling USD CAD, because as we said, we have to reverse everything. And in fact, USD CAD has been moving to the downside. However, with the last report, what we can see that net positions have again started decreasing, with 12K longs getting closed on CAD USD, meaning that 12K shorts are getting closed on USD CAD. So this is definitely expected. If institutions are closing their shorts, it actually means that they're buying. So we definitely expected this to be a fake breakout and the market to break back above the structure, which is exactly what the market did. So everything is starting to line up for the long. The only negative confluence factor that we have is this candle here, because as you know, when you have a candle like this, you expect the next one to fill in the wick. So we can expect some retracement on the daily, which might be more deep than what we actually expect because of the pattern that we have on the weekly. However, as usual, our job is not to predict the market. Our job is to react to what the market is showing us. So when the market will retrace back to this structure, what we will be doing with students. On the 4-hour time frame, instead of this area, With students, we will be looking for a potential long because, as usual, monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But the best time frame for entry is the 4 hours. So after the retracement inside of this area with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to shift from a bearish to a bullish market. And as soon as the market will do that, we will be adding USD CAD on watch list. And when the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and for the market to go and test this previous support, not on resistance at this area. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.